We're analyzing Ferrari, stock ticker RACE, to see if this great business is on sale. This analysis is around 10 minutes. It's going to be intense, but it's going to be worth it. We're using the Select 6 analysis to look at the most telling financial metrics before estimating a fair value for Ferrari. Then we're giving a final rating to the business. There will be a key bonus metric along the way that just might be the tipping point when analyzing Ferrari for your stock portfolio. Before we get into these valuable metrics, let's understand Ferrari's stock performance. Right now, Ferrari trades for $314.49 per share. Ferrari's crushing the market. Year to date, their stock price is up 46%. In the last 5 years, Ferrari's stock price is compounding at 18% annually. Going back to when Ferrari was spun off from Stellantis, its stock is compounding at 26.5% annually. They're one of the best performing stocks of the last decade. Right now, Ferrari also pays a small 0.59% dividend yield. Their average dividend yield throughout this time is in addition to the returns in their stock price. Ferrari trades just $10 below their 52-week high. The company's up more than $130 from their 52-week low. Just under 1% of their shares are sold short. Ferrari is a big business. They have a $57 billion market cap. But the burning question is, why should we be paying close attention to Ferrari? Ferrari engineers and manufactures some of the world's most expensive exotic sports cars. The Ferrari brand is synonymous with Formula One racing, exclusivity, Italian design, and state-of-the-art technology. Ferrari also has a captive finance company that provides funding for dealers and clients. In 2022, the Europe, Middle East, and Africa region accounted for 48% of revenue, the Americas accounted for 28%, China was 12%, and the rest of Asia was also 12%. Ferrari also makes up 11% of Guy Spears' portfolio that shows up in his 13F filing. Monish Prabhai formerly owned 1% of the company. He stated that it was a mistake to sell his holding and that he regrets doing so. Now with that understanding of Ferrari, let's get into the numbers. Starting with metric number 1, we want Ferrari's average return on capital in the last 5 years to be above 14%. The average business earns about a 7% return on capital. Looking for a benchmark that's double this can build in margin of safety based off the quality of the business. Ferrari's earned above average returns on capital in all 5 of these years, even in 2020. In a given year over this time, Ferrari earns just under 22% average returns on capital. These are 3 times better than a typical business. This is a huge check on metric number 1. Metric number 2, we're looking for growth to support their high returns. We want to see 5-year revenue, net income, and free cash flow growth. This metric's all or nothing. All 3 need to be up for this to be a check. We'll also include their numbers up until today when we're calculating this growth. Ferrari's grown their revenues by 48% over this time. Their earnings have grown by 20%, and their free cash flows have grown by 55%. It's great to see this growth across the board, especially with their free cash flows leading the charge. This is a check on metric number 2. Free cash flow is the lifeblood of any business. Ultimately, a business's abilities to produce free cash flows until judgment day, discounted back by some reasonable interest rate, is what that business will be worth. We'll be using that exact method later on as one of the ways we're estimating a fair value for Ferrari. So stay tuned. Metric number 3, we're looking from the view of an individual shareholder in Ferrari. We want to see earnings per share growth in the last 5 years. We just learned that their net incomes or their earnings have grown by 20%. At the same time, Ferrari's bought back 3.5% of their shares outstanding. These small share buybacks increase your ownership percentage as an investor in Ferrari. Because of both this earnings growth and these share buybacks, their earnings per share have grown. This is another check on metric number 3. Metric number 4, we're looking for free cash flow per share growth. This is a similar result with growing free cash flows and small share buybacks. Ferrari's grown their free cash flows per share. Another check here on metric number 4 means that Ferrari's perfect so far. Can they keep this up? There's still one vital piece missing. You might think nailing returns on capital and having good growth is the key, but we haven't touched on the one thing that I believe sets Ferrari apart, which is having these without using a lot of debt. Metric number 5, we want Ferrari's net debt, which is their total debt minus their cash and their short-term investments, to be below the sum of their free cash flows in the last 5 years. Ferrari ended last year with $1.5 billion in net debt. Right now, they have about $1.3 billion of net debt. In the last 5 years, Ferrari's produced $4.6 billion of free cash flow. This even includes their down year in 2020. Ferrari would be able to pay off all of their net debt with just over 1 year's worth of their current free cash flow. This is a big check on metric number 5. Ferrari generates a lot of cash compared to the modest debt they use in the business. Flawless through 5 metrics, does Ferrari have what it takes to be a perfect Select 6 stock? Let's find out right after we cover our bonus. As our bonus, we're looking at Ferrari's dividend profile. Right now, Ferrari pays a 0.59% dividend yield. We want Ferrari to support this using their cash flows. That's been the case in 4 of these last 5 years. Ferrari did not support their dividends with their free cash flows in 2020, but they have in all of these other years. Since then, they've both been growing their cash flows and they've grown their dividends. They've also maintained a reasonable dividend payout ratio. While this is a snapshot of their last 5 years of performance, it's no guarantee for the future. Ferrari supports their dividends currently and has for the majority of these years. The big metric of them all, metric number 6, we want Ferrari's average 5-year free cash flows divided by their enterprise value to give us a yield that's above 5%. If this is the case, this gives a slight risk premium to the yield of the 10-year treasury. It's the first of 2 different ways we're estimating a fair value for Ferrari. Right now, Ferrari has a $58 billion enterprise value. This looks at Ferrari similar to it being a private company. Enterprise value accounts for their net debt position and their market cap. In the last 5 years, we learned Ferrari produced $4.6 billion of free cash flow, meaning in an average year, they produce about $920 million of free cash flow. When that's divided by their $58 billion enterprise value, we get about a 1.6% average free cash flow to enterprise value yield. On a current basis, Ferrari produced $1.1 billion of free cash flow in their last 12 months. When that's divided by their $58 billion enterprise value, we get about a 1.9% current free cash flow to enterprise value yield. Both of those are coming in at less than half of the yield of the 10-year treasury, meaning they're down from the risk premium we're looking for as well. Coming in all the way on metric number 6, this is our first and only X of the day on Ferrari. Don't just throw this business out. We still need to estimate their fair value per share. Everything we've discussed so far is important, but there's something missing that, in my opinion, is the main reason to analyze Ferrari, which takes us on to using a discounted cash flow model to estimate their fair value per share. A DCF model is based off the predictability of a company's free cash flows. Like any model in any discipline, its outputs are sensitive to its inputs. Ferrari's been a very predictable business in its past. We're starting with an average of their last 3 years worth of free cash flow, then using historical assumptions to grow these into the future. It's up to you to figure out if these will be accurate or not for Ferrari. Assuming they grow their 3-year free cash flows at a rate of 12% annually for the next decade, then assuming in the following decade that this growth rate is cut in half and they grow at 6% annually. If we add in Ferrari's tangible book value, which gives an estimate of their net worth, if we want a 15% rate of return, which is what Warren Buffett looks for in his investments, assuming today's valuation multiples stay the same 20 years from now, an estimate of Ferrari's fair value per share is around $50. That's down a lot from their current stock price. Please keep in mind some key points. Ferrari trades at very high valuation multiples right now. They're trading at a 55 PE and a 98 price to free cash flow multiple. While Ferrari's a great business, their stock price may be ahead of their fundamentals. At Berkshire Hathaway's annual meeting this year, Warren Buffett did call Ferrari a wonderful business. Ferrari's been a very predictable business in its past, but that's no guarantee for the future. Keep in mind this discount rate is an estimate of their total returns based off these free cash flows. It includes both an increase in their stock price and their dividend yield. Most importantly, this analysis is not financial advice. It's not a buy or sell recommendation of any security. Consult with your financial advisor before making any investment decision. In just a minute, we'll give our final rating to Ferrari, but we have to address something first. We've covered the numbers, but the qualitative factors of Ferrari may be even more important. What are they? Well, let's find out. Starting with the factors supporting a long thesis, number 1, a growing global population of high net worth individuals expands Ferrari's addressable market and supports volume growth without sacrificing exclusivity. Number 2, with one of the world's strongest brands, Ferrari possesses a rich heritage based in Formula One racing that enables the sales of highly coveted but highly exclusive sports cars. Number 3, Ferrari's low volatility in revenue and profitability, gross margins in excess of 55%, EBIT margins above 30%, and high returns on capital are characteristics of substantial pricing power and are comparable with the metrics of luxury goods companies. But we'd be remiss if we didn't cover the negative factors of Ferrari as well, looking at those supporting a short thesis. Number 1, adopting electric vehicle technology presents a risk since part of the user experience involves the sound generated by a Ferrari internal combustion engine. Number 2, Ferrari requires substantial annual investment in research and development to effectively compete in Formula One racing and capitalize on the transfer of powertrain technology into road cars. Number 3, highly dependent on Formula One racing and exclusivity, Ferrari risks damaging the brand on a prolonged racing title drought and hurried road car volume expansion. There you have it for a balanced perspective of some of the qualitative factors of Ferrari. Now it's time to give our rating. In analyzing Ferrari, stock ticker RACE, Ferrari has the numbers of a wonderful business, similar to other luxury goods companies. It earns high returns on capital, it's grown, it's bought back shares, it generates a lot of cash, and it uses a modest amount of debt. It now also supports a growing dividend. It's worth reiterating this analysis is not financial advice. Even with a great brand supporting pricing power, Ferrari's free cash flow to enterprise value yields don't look attractive compared to the yield of the 10-year treasury. When we performed our discounted cash flow analysis, if Ferrari's valuation multiples stay the same, you believe those assumptions and you want a 15% rate of return, an estimate of Ferrari's fair value per share is only $50. Ferrari last traded at those levels back in September of 2016. While it's a great company, Ferrari's valuation may be outdoing its business fundamentals. Again, this is not a buy or sell recommendation of any security. If you enjoyed the video, be sure to like it, subscribe to the channel for more stock analysis videos, share your thoughts about Ferrari, and let me know what business to look at next in the comments below. Thanks for learning about Ferrari with me, and have a great day.